to you.
Right, well, no problem, no problem. Right, well, very glad to be with you all this morning. And what I sort of tend to start off with these talks is that, yeah, I'm going to show you how I trade, and the title is Trading in 20 Minutes a Day, which we'll get into in just a moment. But tend to start these sessions off with just a quick glance at what some of the main issues are um, around this whole trading arena that we've got. And we've had quite an interesting week, and in fact this is my blog on Traders Class, so there are one or two posts that I've just sort of put up, and amongst these are let's just move down to this one, which is now Canada tightened up their interest rates. Now, I'm primarily interested in trading Forex, primarily. I do also trade the indices, I do also trade gold and silver and oil, but it's in the Forex arena that all of these machinations that we are having with QE, the effects of QE, they're being felt through initially and sometimes really quite instantly in the Forex market. So it's a market that just cannot be ignored. The stock market, yeah, some amazing opportunities that have been, just sort of listening to Back to Best, superb analysis tool for the stock markets. But there is a big but there, that we all know that the stock markets are just overvalued based on what we knew, let's go back a decade. And what has fueled them? It's cheap money. And at some point, the era of ultra cheap money is going to come to an end. It'll come to an end at some point, and it probably is going to have a dramatic effect on the stock market. So there is almost this sort of sword hanging over the stock market valuations that we've seen. And so what we do find, though, is that by switching over to something like currencies, then currencies just move up, they move down, they move up, they move down, and we can run with the swings. Some of them go into enormous bear markets, but as they're based on pairs, a bear market in one pair is actually a bull market in the other side of it. So we just go up and down, up and down, up and down, and trade those swings. So anyway, let's just come back to what has been happening recently. Canada has just tightened interest rates. The US just tightened interest rates and have said that it's going to carry on. And if we just nip back to last month, we had the Bank of England, Carney, telling us that yeah, well, uptick in inflation that we had, uptick there could mean that we're going to have to reverse that cut that we put in just after the Brexit vote. And then we even had Mario Draghi making one or two comments from the ECB, telling us that yeah, we just might have to do something. And there was a sort of a veiled hint that there would be some sort of end in sight to QE. So we've had that as concerted action from these central banks. So we actually got the tightening going on. But if we were to then consider what Janet Yellen of the Fed, the US Fed, told us when she was speaking to Congress, and in her summary, she seems to have changed the tune completely, and she switched. She completely and utterly switched from being a little bit hawkish, meaning that, yeah, you know, economy's booming, we've got to raise interest rates, and she completely switched to a dovish stance. Dovish meaning exactly the opposite of hawkish, and suggesting that maybe interest rates are not going to go up anytime soon. So she has put us right the way back into this will they or won't they process, which has been with us for the last 2 years. And every time we get a little bit of news out that suggests that an economy, particularly the US, is looking up, we might get good non-farm payroll figures, then the currency, the US dollar, will rise. And of course, exactly the opposite. So it's a very, very news-driven market, and consequently, that really gets things going. Now, we were very confused. Most commentators looked at Yellen's statement to Congress and thought, well, hold on a minute. Only last month she was saying more or less the opposite of it, all of this. And then it became apparent with the numbers that came out of the US, CPI numbers. Look at this, red. Core CPI number, red. Core retail sales, red. Retail sales, red. Things were not good. And that's why she made the statements that she did. So the US economy, despite the fact that they're forever talking up the fact that there are more people in employment, the economy is not in good shape. It is not in good shape. And there we are. Realism just kicked in that the prospect of any dramatic rise in interest rates seems to have just taken a backseat yet again. So what do these statements do for us? Well, they do things like this. Gold kicked off. We jumped into gold. I say we jumped into gold. We actually had a pattern that was building up, and we're going to sort of look at what constitutes a good pattern in a minute for the likes of gold. And we also had the dollar index deciding that it was going to collapse. And so, we sort of more or less straight away got ourselves into a couple of trades on the back of this news. So we didn't actually trade the news, but we saw what was going on prior to the news and got ourselves positioned with orders into the market, so we could take the best out of those moves. So there we are. That's the background of where we are right now. We're back in limbo land as far as interest rates are concerned. And if we just consider today, then it's been a real important week for news. My oh my! And today is the day. We've got to wait a little while for the euro numbers to come through, but we've had important numbers coming out of Australia. Unchanged, more or less unchanged. Not much difference there at all. And the Australian dollar, we'll look at that chart in a moment because it's been an absolute rocket ship recently, but it's now looking as if it's gone a little bit too far too soon. And then what about Japan? Japan is, of course, that country that have gone into QE in a big way and really got stuck into it. And they've got all sorts of difficulties in Japan simply because it hasn't really worked. QE hasn't really got their growth rate going, and that's what they desperately want. They want growth in their economy, and it's just not happening, despite all of the QE and machinations with keeping the 10-year rate down at a zero or slightly negative rate. It just hasn't fed into the economy. And of course, there are all sorts of reasons why that is, because to get an economy going, you've got to get trade going between people. People have got to buy things and sell things, and the Japanese demographic is such that there are just too many old people who are quite content with life, who don't want to go and spend their money on the latest and greatest and new shiny thing. They just want to keep their money, and they want to keep it in the bank or under the mattress. They do not want to get things moving. They desperately need to try and change that dynamic. They need more young people. In fact, they sell more nappies. They sell more nappies for the older generation than they do for babies. So the birth rate is not good. And so demographics are against Japan really getting moving. And now they've got political problems. The Abe could well not survive the year, and they're saying, well, something's got to be done. What you did attempt to do over the last few years just hasn't really worked. You'll have to go and we'll start all over again. So we've got that to throw into the mix. And of course we had China. We had China the other day, and in China, and just sort of whizzing back a couple of days there, we had numbers coming out of China. Look at this. Oh, everything's okay, everything's rosy in China, from having been pretty dire, or at least the prospects, with again so many commentators. And we are told umpteen US hedge funds have been positioned, they've sold their put options, they have bought put options in the hope and the expectation that China was going to collapse economically. It hasn't happened. Those hedge funds have lost a lot of money over the years taking that bet. So there's, and the fact that China settled down, one of the big reasons why the Australian dollar has really taken off. So there we are, a little bit of background there. Go to Forex Factory, if you one tends to get a bit of a puzzle as to what all these things are, and you can just click on here. It's an economics educational tool. It's fantastic. So anyone who's a little bit not quite sure what these things mean, just click on that, and Forex Factory will give you chapter and verse. So, well, let's go and look at some charts. Let's go look at some charts. For quite some while now, I've been telling my members that, and talking with them, and getting comments coming back, it's all about the dollar. It's all about the dollar, and this is the dollar index, the DXY. It's a little basket of currencies, and just mirrors what is going on then with quite a few of the exchange rates. If we run out to the weekly chart, then just look at this. We have had this decline, and this decline has been going on since Trump has been in office. Trump said, and still says, that he wants a weak dollar, and consequently that's what the dollar has been doing. Janet Yellen, on the other hand, prior to his inauguration, was bidding the dollar up with higher interest rates. So there was a bit of a battle going on, and Trump won out. Technically, where is it? Where is price right now? Well, there we are, 94.85. In relation to going back to just over a year ago, spring last year, that's where prices come all the way back to. And what we find, standard rules of technical analysis, what we find is that reversals are most likely to occur where previous reversals have occurred. It's a given. it's one of those charting sort of rules, or charting laws, if you like. And we can go back over umpteen charts and just see this time and time again. And I've also got my Fibonacci tool on, which is telling me that prices down here at a Gartley level, and Gartley patterns are absolutely fantastic reversal patterns. Like most, they don't. We get as many false patterns as we do good patterns, and that's true most definitely of double tops, of triple tops particularly. They tend to fail. Head and shoulders actually fail more times than they work out. But Fibonacci, Gartley levels, they're pretty good, because after a big decline, we are likely to get some form of a rally. And just today, that's what we're getting. We're getting a rally today. Activity index has just turned blue today, telling us that there are more buyers than sellers in this market today. Quite where it's going to go from here, of course, we don't know. We just don't know. But there is a possibility of a reversal, a possibility. Now I'm going to go right out to the monthly chart, and what we have seen is, again, going way back now, we're going back 2 years, we've got lots and lots of spikes. And spikes are these long tails of the monthly candles. And here we had a humdinger of a bullish candle. So we've got bullish, 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 bullish. It took off, and it's now come back to where all of that bullish activity was taking place. And so there's no wonder that there is not some support here, some possibility that what we might just get is a rally from here, and that's what could be starting today. So notice I'm sort of hedging my bets somewhat with the language, but anyway, we've taken one or two positions that will suggest that that's the way that things are going. So there we are, that's the dollar index. Now we've got various other charts over here, and I'm not going to bother about stock markets at the moment because ably covered by previous speakers, but let's just look at gold for a moment, because I mentioned on that blog post that we actually did a little trade in gold. So let's just look at this. What we've got is a whole series of waves, down, up, down, little bit of up, down, little bit of up, down, up. And this is just the natural ebb and flow of markets. And we want markets that do this sort of move. What we really don't want are markets that go absolutely nowhere. Those that just move sideways and they pop up a little bit and they pop down a little bit. Just not enough for us to actually make money. Great for the option sellers, but useless for us swing traders. So if we can sort of see the signs, if we can understand what a trend is about, and a trend is just really a succession of lower highs, lower lows, a downtrend that is, and then it breaks into an uptrend, and that whole succession just reverses. So we now get higher highs, higher lows, higher highs, and so on, higher lows, and eventually price turns tail and then moves into its next phase, its next trend. And look at this, that little rule I mentioned to you before, that reversals are most likely to occur where we had previous reversals, followed through beautifully there on the gold price, and the double top, perfect little run all the way on down. So what am I looking for? Right, well, what am I looking for? I'm looking for a market which is a potential reversal candidate. How do I know it's a potential reversal candidate? Well, I look for things such as that, double tops, double bottoms. I look for areas where price has been in the past. And also, I'm looking for a market which is nicely extended on whatever the current previous trend has been. Now we've got a standard little color trend here, which gives us a very broad brush definition of what the trend is doing. But when price breaks through it, then there's a fair chance that we will then get a further run. And it happened just over here on the way up. Price broke through big time. It came back, found some support in that area, meandered for quite a few days, weeks, and then it went for another run up. But then if we just look at how stretched it is in relation to that line, then we can see that it's gone a fair way. We can also see from the activity index down here, which is it's a cross between volume and momentum. So it will also tell us when a market is getting somewhat extended. And then just following that rule of lower highs, lower lows, lower highs, lower lows, eventually it comes to an end with a real neat candle formation that we've got down there at the bottom, with an engulfing through an Hallmey. It then broke through our little red line. The red line became green, and there we are. And so this blue line just shows an area where we would get in. And this managed to run all the way on up until the green line turned blue. And, well, it was as a result of the double top. We didn't necessarily need that line to tell us, but, you know, little visual clues, they do help. We had the double top, and price then decided to come on down. It was time to close the position. So these runs, well, we had a couple here. These runs, they run and run and run and run. So there we are. They really do pick up the points. So we then had the move on down. We had a few sort of spiky days. We had one or two little runs on down, and then we had a little bounce back up, which, you know, we traded one way and then we reversed it, popped back up the other way, and we then had this run coming right the way on down. So where are we right now? Well, where we are right now is that we're long, and this red line got us long at the 1224 level. Why did it get us long? Well, because we'd seen this move on down. It ran in three major waves, an ABC move. We then found that we had a bullish day. Yeah, we'd had previous bullish days, but we had a bullish day which we linked up with this important level, important fib level, picked up by the auto fib finder. It's the false break reversal level. Notice how price didn't do a beautiful little double bottom. It broke through the previous bottom. So people who are looking for a double bottom would be, oh no, price is just going to keep on going down forever. But no, so often we get reversals at that level. So we just followed it and watched it, and then it moved round. Our previous short, well, as soon as our swing trend there changed color, it was time to close it. And we then just waited, because we knew a fair bit of news was imminent, particularly with that talk from Janet Yellen to Congress. And then we end up with a beautiful little pattern there. And the order was put in that had price gone above the high of this bearish candle, we'd want to buy. So we just put the order in the market. And sure enough, as Janet Yellen was speaking, it was triggered, and away we went, and we're currently long on it. We are currently long.
George?
Yeah.
A couple of questions before we move ahead. John is asking, what is the charting package that you're using at the moment to show us?
I'm using MetaTrader MT4.
Okay.
Now, MT4 is very, very widely available. It's entirely free of charge, and I think it's a superb platform. I do also run TradeStation charts, which costs me a fair old bit, and I just wonder why I keep using it, because it costs me money. It is not as quick to update as MT4. So there we are. So great little platform.
Okay. Also, George, if possible, could you explain, Peter Shaft, what exactly do you mean when you talk about the dollar index? Where can you find it?
All right. What I suggest is that you should be, well, you will certainly find it on pretty well any MT4 platform. So many brokers, of course, offer MT4, and just look for it under DXY. Okay. Now, and to get the information about it, just Google dollar index, and it will tell you that it's a basket of currencies. It's not a real currency in its own right, but it's a basket of currencies, the main component of which is the euro. There's a bit of British pound in there, a little bit less British pound than there was. There's some sort of Japanese yen, etc. in there. So it's just an index of those major currencies.
Okay, now, we're getting quite a few questions coming in, but we'll go back to these questions in a little bit later on if that's okay.
Yeah, absolutely. Fine. Okay, well, look, we've looked at this one. I'm going to whiz back now to, I say whiz back, I'm going to whiz to one or two other charts because we've had some really amazing moves. So let's just look at the JPY. Let's just look at the JPY. This is the US dollar pair against the Japanese yen. Okay, so when the US dollar is strong and bullish, that DXY would be going up. Then over here on the left-hand side, we've got an uptrend, very, very clear uptrend. And of course, whilst the US dollar is going up, it means that the Japanese yen is actually going down. So this is a bull market for the dollar and a bear market for the Japanese yen. So again, we just recognize what's going on. We see a bottom here, and at particular trigger points, we then take the trade, run it on up, run the momentum of the move. When the momentum turns round, then we're out of it, and we either take our profits, we might reverse the trade. If there's not a clear enough signal, we will wait for a clearer signal, and we got a signal here. So this blue line picks out where we shorted. There was a secondary entry that we added to the position and got it wrong. So we made 149 pips, but we had to give back 82 because the second part of the trade didn't quite work out. So we just stuck around for a little bit. We then put another trade in. We can't have winners all the time. Of course we take losses, we do from time to time, and the name of the game is to keep those losses to an absolute minimum, and there are ways and means of doing that, of course. But as what was really quite interesting in the Vector Vest talk, our brains very often tell us to do the wrong thing. However, anyway, we took a short here. It didn't work out. It came back. By that time we got our stop to break even. We didn't lose anything. It was just a zero break even trade. And then we got another little signal here, took our 47 pips out of the market, and then that was that. We then get a reversal, and look at this, at one of these really, really important levels, at the bat level, Now, those who've never ever really looked at Fibonacci and patterns, this will be completely and utterly double Dutch. But for seasoned traders, they look for these levels. They look for these levels to see what is going on. And what was going on was a reversal. We've got a reversal candle here. Okay, it was a red candle, so it closed lower than it opened, but the tail of it, the wick, the shadow, as they're sometimes called, was longer than the body, and consequently it told us that during that day there were a lot of buyers mopping up everything that the sellers could give them. And then we get the next signal, and away we go for another number of pips. And well, I will just check. Yeah, no, I'm still short on this. I've got there, unrealized. So we got 44 pips, and we got a stop in there at 44 pips. I think it should really have been hit. Anyway, something for me to check in a moment. But unrealized profit, 44 pips. Sort of by using our stops carefully, then we can give ourselves a guaranteed stop. So overall, where is this going? We just don't know. It's going sideways at the moment. Look at that. We've got price just messing around, can't make its mind up, and it's probably an even bet as to which way this is going to go now in the longer term. We might well find that the US dollar is going to weaken substantially against the Japanese yen, in which case all of those gains going back there to 2011 and prior to that could be completely and utterly given up. But there again, it might rally, and we could well find that the Japanese yen will weaken against a strong dollar. We just don't know. All we can do is to take our trades when we've got the evidence telling us to actually take the trade. So that's we haven't got a great deal of time, and the moves that we've got. The Australian dollar is something that is a very, very good charting market. It's one that we trade in and out of, and using these additional tools, the activity index gives us a broad definition of trend. If it's above the zero line, then we really only should be looking for longs to buy, and that's exactly what we did just down here. We had a previous downtrend. It then started to perk up somewhat, gave us a signal, didn't work out. Again, it moved in our favor temporarily, but we've got a standard rule. Got a standard rules. And that standard rule gets us out of a lot of trouble. It might occasionally stop us making big money, but it stops us losing money. So that, and this is the rule, if we've got a trade which is in profit, in an acceptable profit, then we will never ever let that acceptable profit become a loss. Now, so many traders will find themselves thinking, oh yeah, well, it's gone up, oh yeah, oh, I made £100, £1,000, whatever it happens to be, and then it comes back and hits their stop loss, and what have they done? They've lost £100 or several hundred or whatever. No, the way we do it is that we will close part of that position if it starts to show signs that it's going to come back against us, and we will take a partial profit and we'll put our stop to break even. That's why we get a fair number of these that don't actually go anywhere. Anyway, a little later we get a Gartley level, higher low, and the right sorts of candles. It breaks to the upside. We take 122 pips. Okay, it then comes back. We're not quite sure what's going to go on here. And we get another little run up, get another little signal. And most recently, well, this one just closed this morning, and I'll show you exactly why it closed. Well, we got into it here. Notice how it just came off our color trend line, and then it went up and up and up and up. Along the way, we took partial profits, made sure stops were at break even. Then, just today, we have had this move higher that then went lower than yesterday. And that one was just triggered, and we actually took out of it, I think, just a fraction more than 237 pips. So that would need to be updated. So that's the method of trading. Now, what about the bigger picture? Let's just look at this. This is the weekly chart. We had highs over here, okay, April last year, a whole series of highs running through, and it was in a trading range. We were trading that trading range. Eventually broke out, and the fact that it broke out of what was a rough shape form told us that, yeah, this could be a major longer-term breakout. Where is it likely to go? Well, I shall use this red line. It could well move up a long, long, long way to where there is some prior price action. It might do that. It might not do that. But the fact that we've just had a weekly close above any other weekly close running back around about 18 months tells us that that is highly significant. Along the way, though, we're going to get lots of twists and turns. We've just had a nice little run on the upside, but the time is right now to take our profits on it and wait to see what's going to happen next. We might get a nice little decline, could be 100, 150 pips or more, and it might turn the corner again, as it has done so many times in the past. So that's the sort of thing that we're looking for. Right. Well, there we are. That's sort of taken a little glance at those. I've got umpteen other charts to look at now. Primarily because I want the lifestyle of doing what I want to do when I want to do it, is that I tend to trade these longer swings. But using this whole process, well, you can do it on any time frame you like. You can do it on the monthly, the weekly, the daily, and then you can come down to intraday. So we get these movements. And if I'm going to trade intraday, I prefer trading off the hourly chart. You know, I want to know what the main trends are doing. This is what this week I didn't do much sailing this week, which is my passion outside of trading, and consequently I thought, right, well, let's do a bit of trading this week, and that's exactly what we did. We had a nice little signal that this big down move. The GBP decided that it was then going to change its trend. Our combination of indicators here just told us that, yeah, look, a reversal is imminent. Activity index changed from below the 0 line to above. It broke through our 2 colored lines, and we had the right candle formations. So, yeah, nice little trade, 23 pips. We have, you know, we then had following day 74 pips. We had a really good run on the upside, and then we had a little run. That was a reversal trade. It went up. It looked like it was reversing. It reversed, and as it reversed, we closed one position and opened another, and then closed it as price then decided it wasn't going to go any lower anymore, and picked up 21. So these principles can be used in any time frame. The markets, certainly with Forex, has a fractal nature, meaning that if you can understand a chart, then you will see more or less the same thing on whatever time frame you look at. And if you've got a system, a process of using a series of bits of evidence that you can put together and do a little bit of detective work on one time frame, you can use it in whatever time frame you want to look at, that you prefer to be looking at. I mean, there are those who use these principles and they just use it on the weekly charts, for instance. I need a bit more activity than that, but I don't want so much activity. I don't want to go down to the 5-minute chart and try to chase every little twist and turn. I have done it over the years, and I've actually found it's slightly counterproductive. So I don't now go anything lower than, say, the 30-minute chart. But intraday, I find the hourly is really quite rewarding. So there we are, folks. That's my method of trading, and I like to, as mentioned, like to trade swing trade, the swing trade approach. I like to pick up these longer term trends. We had the US dollar against the Canadian over the years has served us so well. Massive uptrend. It looks now as if we are in a massive downtrend of the US dollar against a strengthening Canadian. Is this going to continue forevermore? I don't know. We're short on it, have been since these 2 red lines. That's where we've got to stop at the moment. We just locked in just above 127. Will it continue? I don't know. I do not know. And so we just stay with the trend. Whilst the trend is running, it's very definitely our friend. And if we get a reversal, well, we get a reversal. Trade gets taken out, and we then just go and look elsewhere. So there are plenty of these charts out there on Forex. It's a fantastic market It is constantly moving, and the opportunities, well, there are just too many opportunities to be able to cover them all, of course. Now, I will just mention that if you're interested in picking up any of this, then the first approach would be to maybe pop over to either Click Event, Traders Class, tradersclass.net, and just sign up our newsletter. I'll keep in touch to let you know what is going on, let you know about posts, etc. And you just sign up there, just pop your email in, name and email, and then you can keep in touch with me. That's that. If you're interested in going a little bit further, then the 20-minute extreme swing trader and the harmonic wave trader is what you've seen in action there today, and we got an offer on at the moment. We got an offer on. Number of people who take the swing trader also take here the price of one. You know, these are regularly 379. We've occasionally put offers on them, sort of 279 or whatever it happens to be. But what we've done, we've put the two 379 packages together. So you get not just the 20-minute extreme swing trader, but you also get the harmonic wave trader. And the harmonic wave trader really comes into its own by enhancing the 20-minute approach, and can also, of course, be used for trading intraday. So you get two for the price of one, 379 quid, but you do not pay that up front. I like people to try stuff out. If they don't like it, send it back. If it doesn't quite work for them, then fine. Nothing's lost. And what we do ask you to do is to put £179.50 down, try it out for 30 days, month. If it's not for you, just send it back and we will send you your money back immediately. But if you want to keep it, as most do, then we spread then the balance over 3 months, £66.50 in 30 days, 60 days, and 90 days. So how about that for a fair deal? And of course, in addition, what you'll get is membership of Traders Class, which means that I keep in touch with you via video at least twice a week. I think we have 3 this week, and it means that I can let you know what I'm looking at, why I'm looking at it, and some of the areas that we think could well lead to reversals that just might be coming up for us. So there we are. That's the deal, and you actually get the Traders Class membership for a full 3 months. Good many people remain as members, and we work a deal out with them. Others say, well, no, that's great. Thanks for the 3 months. I've learned a lot, and they then will go off and do their own thing using the software, which after the trial period, of course, you've got it for life. You've got it for life. Anyway, that's the deal if you're interested in taking it further. But do just sign up for the newsletter, and I'll be only too pleased to keep in touch with you and just let you know what it is doing from time to time. So now, if we've got a few minutes, which I think is that okay, Simon? Can we just stretch a few minutes?
George, yeah, we've got just on 10 minutes left, but we do have quite a few questions as well to try to get through. So,
oh right, well, far away with a few.
That's all right. Just some people have been waiting for a while. So, if we go back to okay, Peter was asking about the auto fib level tool. Is that on this package? I think you mentioned that.
Yes, it is. Yes. In fact, everything that you see on this chart you get. So you've got the automatic fib finder. You've got the color trend. You've also got the green and red line, which is the swing trend, and also the activity index, which is the oscillator, the combination of momentum and volume oscillator. So yeah, what you see is what you get here, and it all runs on the MT4 platform. We can suggest an MT4 broker that we use, who are absolutely first class. There are many of them out there. Take a bit of care with the broker you use. Make sure that they've got an office in the UK, in London, that you can actually phone up and speak to a real person. Look out for some of the senior side of, dare I say, Cyprus, etc. based. You know, there, well, as in every walk of life, there are dodgy ones out there. But anyway, MT4, great little package, and you can pick it up from most of the major brokers. Certainly IG Index offer it, etc.
That's right. What about gold? The gold chart, what moving averages were you showing on gold, if you can remember?
Oh right, okay. Well, quite simply, the color trend, they're not actually moving averages. It is well, that particular one is based on the moving average. Let's go and look at it, and it's a 21 period. The other little line that one might have thought was a moving average, the swing trend, is not. It's based on the average range of various candles, and it moves a little bit like, I guess you've probably heard of the parabolic SAR. Moves a little bit like that, in that it hugs price. Where we've got very wide candles, then it tends to move a bit away from price. When we've got very narrow ones, it tends to come in quite tightly with price, and we use it for stop control effectively. So when the color changes, then you know, we are likely to change our position in the market, either close it or open a new one.
Okay. George is saying, are you using standard indicators for MT4, as I haven't seen the swing trend indicator?
No, these are things that I've developed with programmers. So effectively, we've looked at some of the standard stuff and wanted just to modify it to suit our needs, and that's what we've actually done. One or two of these are totally unique to us, but they fit quite neatly into any MT4 package, and of course we send the software out to you.
Okay. Amit says, how do you justify trend has changed, and which indicator combinations show trend changes?
Right, okay. Now, we've got I sometimes call it a 7-point plan. We're looking for 7 things to sort of present themselves, but let me keep it really simple. And the simplest way to tell a trend change is that let's just take this move on down. I'm going to use a line, and this line is going to pick out, first of all, the high. Okay. Now, if we just look to see when price goes lower, we set it on the last lower high. Okay, right? That's the next lower high. Price has subsequently gone lower than the previous low, and we just keep moving it down. When price comes back up through it, and there we are, that's the last lower high. Once price comes back up through it, we've got a trend change. It's as simple as that, or one method of, this is one of the parts of the 7-point plan. The other parts of it are the color change here of the swing trend. The other part of it is the color trend, if I can get the word out, the color change in the activity index. So we're putting together a little combination of these things, and if the reversal is at one of our important Fibonacci levels, you know, all of these things, the evidence builds up. It's just like Cluedo. It's just like Cluedo. It's just like a game of Cluedo, where we're looking for the evidence, and when the evidence stacks up, then we will put our trades on. But the basic one, and the simplest and the most straightforward, is what I've just done there with those lower highs turning into a combination now of higher highs. Hope that helps.
Okay, fantastic. We're just going to try and get through. I don't think we're going to have time for all these questions. This is great, though. Thank you for all the questions you're writing in. What sort of time frames, George, do you normally trade?
Right, now I personally trade predominantly off the daily, okay? And that's a lifestyle thing because I don't really want to be looking at the screens all day long. That said, I do also look at the 4-hour chart to see what is going on. I will also look at the weekly chart to see what is going on. I want things to be all working in the same direction. But intraday, if I'm able to, I will occasionally intraday trade, but I will do that predominantly from the hourly chart. So it's a very personal decision to take. Some people cannot take day trading. I've known people say, oh, it gives me a headache, oh, I can't stand it looking at a screen. Other people say, oh, I love it, absolutely love it, you know, get stuck in there and da-di-da-di-da. So it's a personal thing as to which time frame you go for.
Okay, 2 or 3 questions on the same subject, George. If someone already has the 20-minute trader, what would be the cost of adding on the harmonic wave?
All right, just drop me an email. I will do you a very, very special deal on it.
Okay, there we go. That's to Sanj, and so 1 or 2 other questions. The same question.
Sure.
Yeah. Very interesting. Thanks. Marguerite says the different levels. What time frame? Peter, well, we had that already. What are the coloured lines moving? The coloured red line coming down through the candles.
Yeah, that's the swing trend, and the swing trend is a tool. Just sort of pick it out on this particular. We've also got the 2 lines, but the swing trend is the green line here from the low moving on up. It changed from red, and it's the broad definition of what momentum is doing. And if we get a change as we do just here, then it's telling us that, oh, look, we've had a really good momentum run. Momentum is now running out, and it's potentially reversing, which is what it did, albeit only temporarily. And it tells us that if we haven't done it already, we must take half profits. We must take half profits and make sure we've got a stop to break even on our other amount. Now, when we go through these little corrections, as we always get in trends, it then turns green again and moves on up. Right, well, we can either just run our previous half of the position, or we can get back in and add to the position. So that's how we use that color change line.
Okay, George, I think we'll need to wrap it up. There are some more questions coming in, but if it's possible for people to direct the questions, if you need to speak to George, support at Click Events. I believe George is the best email to get you on.
Absolutely, yeah.
Type that in now, so if anybody else wants to get straight to George, there's the email address to use. So George Hallmey, thank you very much indeed. Always a busy session when you're on, which is great, and lots of good interactions. We will let you go. Excellent. Because we have Carol waiting to join us next up at midday. So George Hallmey from Click Events, thank you very much indeed.
Excellent. Many thanks indeed. Great to be with you guys, and you're on a treat with Carol.